What's up? Bailey here. And for those who don't know me, I'm a virtual assistant, OBM, and mentor for people who want to start their own virtual assistant business. I left my toxic 9-to-5 4 years ago, and since then have built a business that I'm proud of, that provides me the freedom that I desire, and that pays the bills to boot. And I'm here to show you how you can do it too. We are at my least favorite time of year, tax time. Some of you might have already submitted your taxes for the year, and I applaud you if you have, while others might procrastinate until the last minute. I am one of those people. While that's not the best thing to do, I understand as taxes can get very overwhelming. There are so many different things to know, learn, and remember, and when you're self-employed, it is that much harder. I'm just gonna have a disclaimer here. All of the advice on this video is based on my experience and research, but I will always recommend that you hire an accountant to file your taxes and to ask for advice because your situation could be a little bit different. I am not a CPA, nor do I claim to be, so take my advice as a guideline, but it is not the law. For starters, April 18th, 2022 is the tax deadline for this year. This is the last day that you can file and pay your taxes before you begin to incur penalties. I recommend getting it done as far in advance as you can in case there are any issues with your taxes. But before we get down to the filing, let's make sure that we're prepared to file our taxes. As a virtual assistant, sole proprietor, or business owner, you should be tracking all of your expenses as it relates to your business and keeping the receipts. This includes, but is not limited to, software, course purchases, office supplies, office space, internet, laptop, meals, travel, team members, and Stripe or payment processing fees. Now let me deep dive a little bit into a few of these categories for a second because initially it sounds amazing being able to write off all of these items. But you can only write off meals if you're sitting down with a client and talking business, and even then you can't write off any alcohol purchased, and there are times when you can't write off your own meal, only theirs. In regards to travel, if you're driving, you can write off your gas, but you have to keep a mileage log that showcases how far you've traveled, why you traveled, and the date of your travels. If you're traveling via train or plane, you can write off your ticket only if it's for work purposes. You can't take your family on a trip to Florida and call it a business expense. For some things like your cell phone or internet, if you're using it for both personal and business, it's recommended that you only write off 50% of the bill or its use. When you first start your business, it's okay to be tracking all of these expenses on a spreadsheet, but I recommend that you purchase an accounting software. My recommendation is QuickBooks Online as soon as you can. It will help keep everything organized in one place and allows you to see a better financial picture of your business. Are you still with me? Let's move on to tax forms. I know, I make this sound like so much fun, but while taxes can be a snooze fest, they are really incredibly important. As a self-employed person in the United States, you legally have to report all income that you make for your business. That goes without saying, but I feel like I should mention it just in case. When it comes to tax time, your client will send you a 1099 form if they have paid you more than $600 in a calendar year. If they haven't sent this to you, you can also request it from them. If you've made less than $600 from a client, they don't have to send you the form, but you still have to report that income. When you're hired with a client, they might ask you for a W-9. This is another tax form that will tell your client what your legal name is, your tax ID, which will either be your social security number or an EIN number, business address, and how you file your taxes. One very important thing to note is that you are responsible for all of your taxes. I'll say it again. You are responsible for all of your taxes. You will not have anything taken out by clients, so you'd better make sure you have some money saved come tax time. The rule of thumb is to save at least 30% of your income for taxes. I recommend opening up separate accounts, and anytime you get a payment, transferring 30% of that total into the account. Side note, you should be opening up separate bank accounts for your business to keep your personal and business transactions separate. It makes it easier for you and for your accountant when you hire one, not to mention the time and money it saves if you ever get audited. You will hear about quarterly taxes once you start to owe money. This might not happen your first year in business or the first year your business is profitable. It might not happen for many years, but when it does happen, you'll need to know about quarterly taxes. These are basically tax installments that you are responsible to pay in advance of your next tax season. The goal of this is to not owe the IRS any money, and if you do, it should be less than $1,000. These quarterly taxes will be based on what you paid last year and what you're expected to earn and pay this year. It might change from year to year, but if you follow the 30% rule, you shouldn't have any problems. Unless, of course, you're paying more than 30% in taxes. Then, set aside money accordingly. Taxes when you're self-employed aren't all bad. There are some different tax accounts that you can open that differ from employees. A solo 401k is designed for a business owner with no employees, and you can set this up with an investment advisor. An SEP IRA. This is a simplified employee pension for business owners. You can put in up to $55,000 a year. And of course, there's a traditional IRA. The money that you put in now offsets your taxable income and gives you a break on your taxes. The money is taxed when you take it out at retirement. You can do more research into which one works best for you and your business, but it is incredibly important to start saving for your retirement as soon as you can. Self-employed individuals don't get the pension benefits that employees would. We make our own. Stopping here for a second so you can hit the like button for the YouTube algorithm. If you're enjoying this video, I'd really appreciate it. There are two big mistakes I see often with new virtual assistants and business owners in general. And while I've touched upon them slightly, I wanted to highlight them again because they really are that important. Review your transactions and accounting at least once a month. Don't wait until the end of the year to review your transactions and see what can be written off. Chances are you don't remember what the dinner at Olive Garden was for, and who knows where that receipt is. With that, I recommend an accountant be the first hire in your business, as they can put together financial reports, projections, and even tax estimates for your year and help you along the way with write-offs, advice, and the best way to capitalize on your taxes. Set aside 30% for your taxes. I will say this until I'm blue in the face because I learned that lesson the hard way. In my first year in business, I didn't set aside any money for taxes. I wasn't used to having money, so I paid off my debts, took a few vacations, and didn't have the forethought that I had to pay the tax man. Well, I paid the tax man desperately for that mistake. I ended up owing over $10,000 in taxes, and because I owed, they needed me to do quarterly installments as well. Fortunately for me, I was able to rectify and get everything paid off in my second year, but since then, I've been a stickler on putting aside money for my taxes. Don't make that mistake. It's incredibly stressful. Regardless if you're an LLC or a sole proprietor, you will file your taxes the same way. Your business and personal taxes aren't separate, which means that whatever your business makes is considered your income. This is different if you're an S Corp or a C Corp, as you will more than likely pay yourself a salary like an employee. But most businesses are happy being an LLC or sole proprietor, and I recommend staying that way until your tax bill becomes unbearable. There's the basics of filing your taxes as a self-employed business owner. Congratulations making it through your first year of business. You should be proud, and if you're feeling overwhelmed, it's a sign to hire an accountant. Again, I just want to say that I am not an accountant or a CPA, and my advice should be taken as such. If you have questions about your unique situation, contact a CPA in your area, and they'll be able to walk you through it. If you enjoyed this video, then please hit the subscribe button below, smash that like button, and don't forget about the notification bell, which allows you to be the first to know when I post a new video. I create videos all about how to start your own virtual assistant business, and I get very real about the trials and tribulations of being a business owner. You don't want to miss it.